have an analyst join us right now to talk about all of this. Craig Irwin, senior research analyst at ROTH Capital, is now at the table. Good morning to you. You saw these numbers. By default, the numbers are very, very good.
This is an excellent quarter. They operationally did a great job. The
question I have is, you're looking at the stock popping. I don't know if it's so much the numbers themselves in terms of demand, which is part of the story, so much as him saying the Shanghai factory is going to be on board much quicker than people thought. You had the Model Y issue, or at least him telling everybody that it's coming. He's made proclamations about things coming that have taken a lot longer in the past.
Yeah, they basically get to invent their own milestones and plant the goalposts where they choose a lot of the time. So Model Y coming a little bit sooner and Shanghai being online are not big surprises. I think this is something where they have a lot of flexibility to manufacture that. I think what's actually driving the stock...
Manufacture that is in manufacture the truth of when it happens? Or
yes.
Okay, so just let's take a step back. So that part of the news you are discounting?
Yes.
To what degree?
So the Shanghai facility is a knockdown. They could show us 5,000 cars a week out of there if they wanted before the end of the year. Realistically, it's demand out of China that matters more than anything.
Okay.
And demand has been reasonable, but not ramping as quickly as we had thought. But it still should see some pretty healthy demand into the end of the year. So I give almost 100% discount on the Shanghai earlier move. Model Y, that's positive. Usually Tesla actually does start shifting backwards with its new cars. You know, the last 4 launches have actually gone backwards. So this is a positive. But I think they were pretty conservative in the timeline they shared originally.
Okay. Your stock price for this company, I mean, the one... $249
target.
That's lower than where we are, though.
Yeah, so what I'm looking at is revenue is down $520 million year over year.
Okay.
Right? Why is that? We have 10,000 fewer Model S and X cars this year versus last year. Price in the Model 3 is actually off about 20% year over year. And it looks like quicksand to me. So we have to look at 2020 and ask, are we going to see further deceleration? Are we going to see further probable price pressure on the Model 3?
In terms of
I think
margin.
so.
You think the margin's got to come down?
Yeah, so I think it's overdone at 300. I think, you know, if someone wants to be long this...
And the Model Y isn't going to come save the story?
I'm a skeptic. I think it probably does end up cannibalizing the 3 in a very similar way to when we saw the X come in with the S.
Right. What about the competition? We always say the competition's coming. These other electric cars are going to come, and that's going to be the competition. And that's not really the story at the moment.
No, it's not. I think the headline numbers on the Porsche Taycan were taken a little bit positive for Tesla, right? The range and 0 to 60 not as compelling as the Model S. You know, Tesla has a technology lead. Others are trying to catch up. But, you know, a lot of the PMs out there are all talking about their pre-orders for the Taycan now versus, you know, a few years ago when we were talking about pre-orders for the Model S. I think you're going to see impressions change as these vehicles start to be on the road.
And do you still think it's an electric vehicle to electric vehicle competition? Because the way Elon Musk speaks about it, you would think that it's about converting the unconverted to buy an electric vehicle. And I think that's part of the story. But I also think, I would imagine, and I've heard him also say, that a huge percentage of the people who buy a Tesla are buying a Tesla because they think it's cool, and it's that or buying a BMW with, you know, fuel in it.
Both sides are actually fair arguments, right? EV versus EV. If someone wants an EV, you know, Tesla is, you know, one of the most compelling choices right now. Most of these buyers are premium vehicle buyers from the first place. So there are people being pulled into the pool, and I expect that pool to continue growing. So, you know, you're going to see benefits from both sides in the EV market as it continues to roll.
Hey, Craig, how should we look at China with the new factory opening there? Because they are looking at that as a huge advantage, given how much they can manufacture the cars for there and then turn around and sell them. What do you think?
Yeah, the recent volatility with the trade spat has me maybe back off a little bit. You know, when I came back from China this summer, I was thinking 25 to 30,000 vehicles is actually pretty good number for this year. Just looking at what's happened with the NBA and some of the other things externally, American brands don't necessarily translate into that momentum they should. So Elon's doing an impeccable job managing the Chinese relationship, managing expectations there. But let's call it a little bit uncertain right now. We have to really see how it rolls, how it moves forward. I do expect manufacturing there to ramp smoothly, though, in the beginning.
And I mean, that's maybe the difference with some of these companies. We had the Honeywell CEO on yesterday, and the reason that they have not been more impacted is because they make things locally and they use local employees, local offices. I think it's probably still a tricky line to walk if you are an American-based company and you don't want to offend your home office with some of these things. But
there's merit to that, but Tesla's culture, right, is to overhire at the front end of their production and then cut the headcount. And that kind of thing doesn't fly in China. Right. It's not taken very well.
Right.
So there will need to be some cultural accommodations. You know, there has been a tone-deaf management style at the company in the past.
What's the debt story in terms of, I mean, net debt is actually up.
$12 billion in debt,
right.
a lot of money. I mean, most investors are looking at this saying...
I'm only pointing this out because if you go on the sort of Twitter trolling the shorts out there,
yeah,
all they do to these now when numbers like this come out is they start talking about the debt story.
Yeah, I mean, that's what the bears go back to all the time, right? So the reality is the debt's manageable for now. They had, what, $237 million in free cash, even though CapEx was up 135 sequentially. I mean,
so that's not part of your short story. Because right now, you would be short this company.
I think it's overdone. I would short it here because I don't expect the fourth quarter to be as interesting as the third quarter, given frictional costs for Shanghai.
It's not the subsidy story anymore. That's what the other...
So we're still looking for a little bit more detail here, but the European subsidies that kick in next year could be rich, could be really rich. $9,000 plus a vehicle versus an average of, what is it, $1,380 a car this past quarter. So subsidies are very, very important. They do drive gross margins up, you know, but it's a couple hundred basis points now. So subsidies matter.
Okay. We're going to leave the conversation there. Craig, thank you.